Good morning and welcome to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, it seems after a 3-day rally, the bulls are in a mood for a little bit of a breather. But if you look at the Nifty futures on the Singapore exchange at this point of time, they're indicating a flat to mildly negative start for the local market, largely because there was a lack of cues from the US market, which was shut yesterday, while the Asian markets are also quite dodgy at this point of time. But there is some news to lift the mood for the bulls. After a very long time, there is net buying from foreign investors. Santo, yesterday they net bought more than 500 crore shares, 500 crore worth of shares in the market, along with DIIs who were also net buyers. So it seems retail investors actually surprisingly were the net sellers yesterday in trade. But if you look at how the setup is for today's session, technical factors are likely to weigh more than the sentiment right now. Two major constituents of the Nifty, which is Infosys and HDFC, are both going to trade ex-dividend today. So there is going to be pressure from that end. Plus, the net buying that we saw from FI yesterday may not last another day, Santo, because today there is going to be readjustment in portfolios of a lot of passive investors, abroad because of the MSCI readjustment, and that could trigger outflows to the extent of as much as $600 million, according to some extent. So overall, things are not looking as great today, but the general feel among the bulls still remains quite robust.
CJ, which are the stocks actually in which are likely to get majorly affected by rebalancing?
See, RIL is expected to get good inflows, so there could be some support from there. But some mid cap and mid to large cap names like Adani Green and others are likely to see some bit of outflows, because this is a quarterly readjustments, and because of India's performance over the quarter, there has been a little a little decline in the weight of Indian stocks in the MSCI indices, and therefore because of that decline in weight, now passive funds who track these indices very closely, almost mirror them to the point, they will also have to readjust their portfolios, and that is the reason why we could see some outflows today in the market from foreign investors.
Well, CJ, I think you're still getting a little too excited about this sudden turnaround in FI purchases. It's just 1 day, right? And 500 crores.
But 1 day is a start,
Yes, they all start that way. The longest journey begins with a single step, as the Chinese proverb goes. That said, CJ, my gut is that this is still a sell on rise market. It's been driven largely by short covering. It's very evident that you're not seeing the kind of buying support which is needed to take the market higher from these levels. Besides, the market is also lacking triggers. Once the earning season ends, then probably you could again see stocks slipping back into the sideways range, or maybe even lower.
Maybe, Santo, actually the end of the earnings season could also be a little bit of a reprieve for investors to now focus on the more macro themes. The concerning bit is that yesterday oil topped $120 again, and right now it was trading about $121 as EU has brought in more sanctions on Russian oil. It seems almost 2/3 of Russian oil exports will now be banned for EU customers. So that is a big trigger for the rally, the rebound that we are seeing in oil, and that could be something that investors as well as the government will probably, and the central bank of course, will want to keep an eye on. That said, the macro environment, while negative, is largely priced in my opinion, but there are a lot of stock cues that are happening at this point of time, given the flurry of earnings we have seen yesterday. Starting off with
Jain Irrigation. Now the company is India's second largest micro irrigation player. We are seeing some kind of a turnaround in the company's fortunes. It's been reporting losses for quite some time now. For FY22, the company has turned profit. More importantly, it's also been able to manage its operating margins, and the debt has remained quite stable. In fact, the huge debt was one of the things which is a big drag on the company. Now the company, while it has not reduced meaningfully, at least it seems to be making some progress there, and I think here on probably you could see the company building on its financial performance.
Santo, you're talking about a turnaround. I mean, I understand, okay, on the reported earnings, of course, there seems like a big jump on the profitability of more than 400% probably on a year-on-year basis. But if you adjust for the one-off gain that they have seen in the quarter, they actually ended up reporting a net loss, on a year-on-year basis. So that does not convinced me that the company is actually seeing a turnaround. Apart from that, if you look at the profitability as well, Santo, on a sequential as well as in a year-on-year basis, the company has seen its margin decline at this point of time. So it does not seem like this is a turnaround story that you are so bullish about. I will rather bet on other possibilities that are out there in the market that are much more certain and are on a much more surer foot than Jain Irrigation.
Well, if you look at just the quarterly numbers there, CJ, there's been a 26% improvement in top line, year on year, and also operating profit has more than doubled. Also look at some of the other numbers. So for instance, debtor days has reduced from 161 to 120, inventory has gone down from 231 to 209, and cash conversion cycle, the rate at which it's able to convert its goods into cash, that has improved from 282 to 227. So there is improvement. And I take all the other points that the company, but for the other income, the company would have still reported a loss. But also then look at the price you're getting it at. It's available below book. So that's the only thing that caught my
cheap is not always good, Santo. Talking about cheap, well, LIC's IPO happened, earlier this month, and of course, the entire argument was how valuations were so attractive, and the IPO sailed through quite successfully. But the listing was quite a dampener on the market's mood, and I don't think the earnings that have come out for the March quarter are going to do much for the sentiment of the investors. The Q4 net profit declined about 18%, even though there was a sharp jump on the revenues of the company. So that does not really bode well for the stock's performance later today. But the big trigger, of course, was the hope of a good dividend, right? People were expecting a blockbuster dividend from LIC, given that the successful listing, and plus the government has also been pushing some of the PSUs to give decent dividends this year. But the dividend came out to be only 1.5 rupees per share, which is actually less than the 10 rupees per share of face value for the stock. And that is going to probably disappoint a lot of investors of LIC. I would not be surprised if we see a downtick on the stock later when it opens for trading in a few minutes.
Well, CJ, I was speaking to Neha Dave of Moneycontrol Pro a short time back, and this is what she had to say. And we also have a viewer, Amit Panigrahi, who wants to know our view on LIC. So Neha Dave of Moneycontrol Pro. So what she says is basically that net profit is not the best way to look at an insurance company, life insurer. That is one. Secondly, it's all about the embedded value. Now the company was quite cheap the corporation was quite cheap when it had come out with an IPO. 5,40,000 crore around was the embedded value, and the market value, the valuation, it was around close to about 6 lakh crore. So after the steep correction, probably it has become, it's now available below its embedded value. Also remember, LIC has a strong market share of about close to 66%. Even if it does come off a little bit, it will still be bigger than most other players. And lastly, there's a change in LIC's accounting policy. Earlier, it was distributing a lot of surplus to policy holders. That is now going to change, and it's going to do it. I mean, bad news for policy holders like you and me. But well, if you are a minority shareholder, probably it works well for them. So it's now taking a leaf out of the book of other private life insurers, and it will be changing that policy. So this should also be reflected in LIC's earnings going forward.
Well, Santo, you talk about embedded value. Of course, the March 31st embedded value is still not out. The company has said that they are still doing the exercise on that, and probably the numbers is likely to come out by the end of the June quarter. But for me, the fact is that you talk about the embedded value that was there at the time of the IPO, which was about 5.5 lakh crore, right? And that was based on the numbers that were available on September 30, right? Now, LIC's embedded value is largely affected by the equity investment, unrealized gains on the equity investment. Now, according to the the IPO papers, if you look at 10% decline in the market or its equity investment could lead to as much as 7% decline in its embedded value. Now, we know what has happened to the market since September 31st, right? We have seen more than 10% correction in the market. So, I will not be surprised but if when the report does come out, the LIC's embedded value actually goes down instead of going up from the 5.5 lakh crore that it was in September. And that is probably what you have seen reflect in the share price performance of the company since the IPO listing.
Well, Amit, if you're watching this show, we presented our views, and now it's up to you whom to go with. Next stock on our watch list is Sun Pharma. The company reported a net loss for the fourth quarter. Largely the profit.
Disappointing, I feel.
Disappointing, but the erosion was largely due to one-off factors. Basically it had to settle litigation.
This is like a pharma company tradition. Every March quarter, all of them will come out with intangibles. I mean, we have seen that with Dr. Reddy's as well, with Sun Pharma now. I mean, from my experience tracking pharma sector, this is a March quarter tradition that all of them have.
Yeah, but if you look at Sun Pharma, it's been a steady performer over the last ever since you had the lockdown.
Right.
The stock has more than doubled rather from its lows. Good steady performance, and according to Morgan Stanley, scale up of its specialty chemicals business in the US and also launch of niche drugs is what are going to be the key triggers for Sun Pharma going forward. And it's also of the view that price increases taken by the company should help it, offset a lot of the cost increases.
Well, Santo, I feel that, see, this net loss that happened was a big surprise for the market, right? Investors were expecting quite a healthy growth in the bottom line of the company. So that surprise net loss is likely to dent confidence and probably will result in a significant cut in the EPS estimates from analysts. Apart from that, if you look at the margin performance, that itself was not much of a winner for the company. About 24.8% consolidated operating margin, which was below estimates of the CNBC poll. So that goes to show that on the profitability front also it's not faring as as well as probably investors were expecting, or the stock performances.
But remember, CJ, it's been holding on to this margin. You had some really outlier margins up to 2017. It's come off then, but since then it's managed to hold it in that level.
True. I mean, okay, even margin, probably keep aside the margin. But look at the FY23 growth guidance, high single digit growth guidance. I mean, this is the same growth guidance that the company has given for the past 2 or 3 years now. This is despite so many analysts, building up the company's specialty portfolio, drug portfolio that it has in the US. Despite all of that traction in the specialty, segment, they're still expecting only high single-digit growth in the top line of the company, and such an average growth, guidance does not really bode well for a stock which is expected to do so well or has done so well over the past 2 years. I feel that this is an average growth story with an average stock return trajectory, and therefore probably there are better opportunities for me out there in the market than even within the pharma space, like Granules I mentioned yesterday, than Sun Pharma.
Okay, and what's the next stock that you have?
Well, the next one stock that is showing some signs of turnaround is Jubilant Foods. Well, we all know what happened to Jubilant Foods in March and in April. The stock took a big beating when the surprise announcement came that the CEO of the company is going to resign. Now they have appointed a new CEO with a very strong pedigree, so that is going to be a very good sign for the stock. But before I continue on Jubilant Foods, let's just take a quick check on the market. We have seen a downtick on the market as expected. The Nifty is down about 0.5%, Sensex is down about 0.6%, but it's the mid-cap space that is faring a little better. They're about flat. Nifty mid-cap 100 is about flat at this point of time.
And breadth is also pretty good, about 1127 stocks up and 652 down. Nifty Bank under pressure. Sun Pharma is down by about close to 3%. So yeah. CJ, maybe I think you got your call there.
I don't want to, brag.
Of course you don't want to. You're a very modest
What can I
guy.
say? But I mean, of course, the two big downers on the mark or on the Nifty 50 is HDFC and Infosys. As we mentioned, they are going to trade X of their dividend price today. So therefore, both those index heavyweight are going to be a big drag on the index. So we'll have to see if RIL could probably bump up or probably help market cut its losses, because there are expected to be significant inflows into RIL, but that is something that we'll wait and watch. Coming back to Jubilant Foods, Santo, apart from the CEO story, I mean, which is basically a big positive for the stock that the appointment has happened, and also there is the HUL factor again attached with the CEO, because the new CEO is also an ex-HUL person, ex-McKinsey partner, so good pedigree along with ex-Amazon. He helped build the food grocery business for Amazon as well, Amazon India. So apart from that, if you look at the earnings as well, the Q4 margins were quite good, better than what the street were expecting, largely helped by the fact that they took price hikes during the quarter. So that is probably going to bode well, because they have taken similar price hikes in June quarter as well. So I would expect that margin trajectory to continue. And lastly, the company remains a big beneficiary from the reopening theme, a theme that you have been so bullish on, right? So I feel that given the correction in the stock, given the compression in the valuation that we have seen, Jubilant Food at this point of time is looking quite attractive from a risk-reward point of view.
Well, I do like the reopen theme. I'm bullish on it, but CJ, trust you to pick and choose, very selectively.
Absolutely, but you have to. This is a stock pickers market, my friend.
No, I was referring to the points that I'm bullish on. But there's also inflation, which I've been constantly talking about. That hurting consumption. Now, in the case of Jubilant Foodworks, still till some time back, the company used to command a scarcity premium because the stock was only one of its kind. That's why you saw consistently, corrections used to be very short-lived. This is the first time you're seeing a fairly deep correction in the stock. So, again, the point that I come to on relative valuation, the stock is not exactly cheap. It may be again cheap from its highs, but in absolute terms, I wouldn't say that. Secondly, now you have plenty of other QSR stocks to, kind of pick out from, right? You have Burger King. And you have.
But why would you give up on the market leader, my friend?
You would not give up on the market leader, but I'm saying that scarcity premium, which used to be there till some time back, that is no longer the case. There are plenty of other stocks to choose from, and I think that is what is reflecting in the pressure on Jubilant Foodworks.
But I feel that there is, cause for some sort of optimism on Jubilant. I feel that June quarter and September quarter onwards, as raw material prices also start easing with the effort of the government as well as the central bank, I feel there is hope for a revival trade in Jubilant, given that valuations, as you mentioned, have come down. Although the scarcity premium may have been taken out, but let's not forget that this is a market leader of a very, very dominant brand in this country and is rapidly also expanding its footprint, and the penetration level is also rising. So from a longer term perspective, I feel probably even if valuation were expensive at this point of time, it will not matter to me.
CJ will never take a no for an answer, and he'll argue till death. Well, the last stock on our watch list today is IRCTC. It's also a stock that one of our viewers, Naveen Kumar, wants to know about. So Naveen, here is my take on the stock. The fourth quarter numbers were pretty good, no doubt about that. It's been a big beneficiary of the reopened trade. Also, you've seen some big jump in its ticketing revenues as well as catering services. So, a blowout quarter. But here's something that I'm kind of not quite kicked up about the stock. That's the fact that institutional investors have considerably trimmed their exposure to IRCTC over the last 3 quarters. In June quarter, FIs and DIs put together owned close to 19% of the stock. That number has now come down to about 12%, and despite the fact that the numbers have been improving, they've not been in a hurry to load up on the stock. A big chunk is still with the retail investors who had bought into that platform story, which CJ here has been quite vigorously pushing for. But since then, the stock has been struggling. Even in the SLB segment, that's the securities lending borrowing mechanism window, there is a short position of close to about 7 odd lakh shares, which shows that there is still a lot of bearish bets on the stock, which leads me to think that for technical reasons alone, the stock could be under pressure for some time to come.
Santo, I feel that the correction in the stock has been dreadful at this point of time. I mean, if you look at the stock, it's about 700. At one point of time, it was 1800, 2000. During the rally in 2021, and it's almost it's almost closing in towards this IPO price of about 300 to 350 rupees. So for me, there has been good enough correction. Yes, the platform story did burst on the market the past 6 to 7 months. We have seen what has happened to all the new age technology, all the internet platform stocks such as InfoEdge as well and others. But right now, I feel valuations have become so attractive that it would be almost criminal to ignore IRCTC. I'm not saying that probably investors start buying, probably sell their house and put all the money there. But I feel that the risk reward is now so attractive, especially on the back of the earnings performance that we have seen in the March quarter. And well, the best quarter probably will be the June quarter and September quarter when traveling picks up across the country. And so from an earnings point of view and from a longer term story point of view, this stock still remains one of the most sought after in the market, given that it is also a very profitable entity backed by a good promoter. But the only concern overhang probably on the stock is that the fact that as well it does, it will also probably motivate the government to take some profits, right? It has to, pare its stake. The government is also trying to, make up for some of the subsidies it is providing this year to ease inflation pressures. So possibly market is a little concerned about possibility of more OFS coming on the stock, and that is probably what is reflecting on the counter at this point of time.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Viewers, thank you for sending in some of the queries, and if there are any stocks that you would like Santo and CJ to, comment on.
So yeah, you can please post them on the comment section below, as well as your banter and your feedback, whether good or bad. Apart from that, you can please follow us on the social media links at the bottom of your screen, and stay tuned to moneycontrol.com and the Moneycontrol app for rest of your financial coverage. We will catch you live again at 3 p.m. of course, with the entire day's action. Till then, have a great trading session.